President Trump's tariff strategy is accelerating the global move away from the US dollar, what's known as de-dollarization. This trend has been unfolding for some time, but recent events are pushing it forward faster. Other countries are starting to question their reliance on the dollar and the broader US-led financial system. Last month provided a clear example. When Trump announced a new wave of reciprocal tariffs, the stock market took a hit. Under normal circumstances, investors would shift into U.S. Treasuries as a safe haven, and the dollar would strengthen. But this time, that traditional reaction didn't happen. Instead, it signaled something deeper, a growing crisis of confidence in the dollar itself. Here's a video of BlackRock's co-founder making a statement. He's saying that this is not normal. Take a moment to watch it.
In this particular downdraft in the market, we're seeing Treasury yields go up and the dollar weaken. That's kind of an alarming trend to me.
Okay, so now people are beginning to ask questions. Is the dollar no longer the reserve currency of the world? My response is that the dollar remains the world's reserve currency, but it's gradually losing its dominance. Let's take a look at the dollar's share as the global reserve currency since 2016. As you can see, it's been in steady decline. Now here's a 25-year chart, and the pattern is the same. A consistent drop from around 72% to 58%. The concern is that we may see this de-dollarization trend accelerate. But I want to show you this to help clarify the situation, so there's no misunderstanding about what's actually happening. Take the euro, for example. It's currently in second place, but if you look at the numbers, in 2009, it held a 28% share of global reserves. Now it's closer to 20%. So it's also declined, meaning the dollar isn't being replaced by the euro, nor is it being replaced by the Chinese RMB. That's not happening either. So the question is, who exactly is the dollar losing ground to? So what we're really seeing is the dollar gradually losing ground to a mix of several other currencies. Since 2016, a number of them, like the Japanese yen, British pound, Canadian dollar, Australian dollar, Chinese RMB, Swiss franc, and others, have all made small gains. This light blue line you see here represents a blend of these other currencies. The key point is this. The dollar isn't being replaced by a single currency. It's being replaced by a diversified basket of multiple currencies. And someone really needs to explain this to Treasury Secretary Scott Bent, because he's focused on the idea that we don't have to worry about the dollar being replaced by the Chinese RMB. But that's not the real issue. The concern isn't about one currency taking over. It's about the dollar slowly being edged out by many. Kindly take a moment to watch this video clip.
And when I hear all these stories that the dollar is no longer going to be the reserve currency, if you end up with the Chinese who are willing to use their currency as a trade tool, that doesn't seem like a very good reserve asset to me.
All right, it's really important that you understand what's going on here. And I'm going to share what you can do to protect yourself. I'll also tell you what I'm personally doing to safeguard against this ongoing de-dollarization trend. You need to realize that having the US dollar as the world's reserve currency comes with significant advantages, including, first, lower borrowing costs for the US government. So, what's happening is that the world places a high level of trust in the US dollar and the US government. As a result, other countries are willing to lend money to the US at lower interest rates, which makes it more affordable for the US government to borrow. 2. Now, another major advantage we benefit from is as the exorbitant privilege. The term was originally coined by a French official, and it basically means that Americans are able to consume more than we produce, without triggering a currency collapse. It's yet another advantage that comes with having the world's reserve currency. And thirdly, we also get increased financial influence. So, being the world's reserve currency gives the US powerful geopolitical influence. One example weakened the ability to enforce or threaten economic sanctions. So yeah, being the world's reserve currency definitely comes with some nice perks. However, countries' trust in the US dollar has been eroding. So what's behind this decline? There isn't just one reason, there are several, and I'll walk you through some of them. The first major factor is the US government's ongoing fiscal irresponsibility. Essentially, the government, along with the Federal Reserve, has been printing trillions of dollars to fund its excessive spending. We're currently running a deficit of about 7% of GDP, when a more sustainable level would be around 3%. That's the second reason is the US debt crisis. So, The U.S. government is now facing a critical moment in an increasingly unsustainable debt crisis, with interest expenses continuing to rise. And if that weren't enough to push other countries away from the dollar, President Trump's tariffs further strained relationships with key allies. As a result, more countries are being driven to de-dollarize. This shift threatens the very perks we've long taken for granted, leading to higher borrowing costs and increased inflation at home. So here's recap what happened when Trump introduced reciprocal tariffs. It wasn't just the stock market that took a hit. The bond market also finished it experienced one of worst weeks in decades. And let's be clear, that's far from normal. And when bond prices fall, specifically U.S. Treasuries, their yields go up. In other words, interest rates increase. And interest rates haven't spiked this fast since 1982. It's not that they're at record highs, it's the pace of the increase that's raising alarms. So, interest rates on U.S. Treasuries have been rising sharply, and it's having a ripple effect across the economy. Mortgage rates have surged, making home loans more expensive. It's also becoming costlier for the U.S. government to borrow money, and higher interest rates are putting downward pressure on the stock market. As a result, the bond market sell-off sent shockwaves through the broader financial markets, prompting President Trump to take notice. He recognized that his tariff policies had undermined global confidence in the U.S. economy, weakening demand for U.S. Treasuries and contributing to rising yields. So, this served as an additional incentive for President Trump to temporarily halt the reciprocal tariffs for 90 days. Because a crash or dysfunction in the bond market could risk triggering a crisis reminiscent of 2008. However, President Trump has denied that this concern was a factor in his decision to pause the tariffs. Please take a look at this video clip.
The bond market right now is beautiful. But yeah, I saw last night where people were getting a little queasy. I think everything had, well, the big move wasn't what I did today. The big move was what I did on Liberation Day.
Now I'd also like to share this video clip of Treasury Secretary Scott Bent, stating that the bond market had no influence on their decision to implement the 90-day pause. Naturally, it's up to you to decide whether or not to take his word for it. Please look a video clip.
And all this was, again, this was driven by the president's strategy that he goaded China into a bad position. They responded. They have shown themselves to the world to be the bad actors.
All right, but I'm telling you this so you can understand how it works. So if you're from another country and you want to trade with the United States, you'll need US dollars. But you won't literally be holding US dollars, you'll be holding US Treasuries. However, if tariffs are imposed, you'll end up trading less with the US. And if you trade less with the US, you'll need fewer dollars. And if you need fewer dollars, you'll want to sell your treasuries, which can cause the treasury market to fall and interest rates to rise. So personally, here's what I'm doing to protect myself from de-dollarization, and it's something you can consider as well. I've been saying this for years, and it's quite simple. Nothing complicated. You need to diversify with gold and silver. While I own stocks, I also make sure to diversify into precious metals. Personally, I prefer silver over gold, but I hold both. You can invest in gold or silver either through the stock market or by purchasing them in physical form. Personally, I lean towards physical metals, but I understand that this might not be practical for everyone, so it really depends on your individual circumstances. On the stock market, gold is represented by GLD and silver by SLV, which I'll write down below for you. As de-dollarization progresses, these precious metals are likely to benefit. However, if you're going to buy gold or silver, I strongly recommend approaching the investment with a long-term mindset. I hope my opinion will be helpful to you. If you like the video, please share it, and if you're new to the channel, don't forget to subscribe and hit the bell icon. Thank you.